Hello, my name is Elizabeth Canales. I am an assistant extension professor in the Department of Agricultural Economics at Mississippi State University. I would like to welcome you to this educational presentation as part of the Food as a Business program series supported by Mississippi State University Extension, USDA NIFA, and the Southern Risk Management Education Center. The Disaster Preparedness for Food Business program focuses on preparing agricultural operations for unexpected events, natural disasters, and other situations that can affect a business. Our goal is to equip producers and processors with tools to mitigate these risks. In this video, I'm going to be talking about general risk management and financial disaster preparedness practices. Some of the principles I will talk about in this video will be useful regardless of whether you apply them to your business, operation, or your personal life. Why is it important to prepare? The more prepared we are, the more resilient we are. We may not be able to stop a disaster from happening or even prevent the impact from an event affecting us. But being prepared can help us have things in order and in place to start the recovery and reconstruction process, which can reduce the stress from a crisis. We encourage you to consider some best practices and start taking some preparedness steps because disasters can really strike anywhere at any time. And unfortunately, in most of the cases, we don't get warnings ahead of time or with enough time to take some of the steps that we will talk about during this video. When we talk about disasters or unforeseen events, we are talking about both natural and man-made events ranging from floods, tornadoes, power outages, to technological threats, but also workplace accidents and sickness. Right now, we're going through a coronavirus pandemic, and we can see how these unexpected events can really affect businesses in multiple ways. We have different kinds of disasters. They can happen suddenly, like hurricanes or earthquakes, or throughout a period of time, like droughts, floods, or a pandemic. These disasters can be disruptive in the long term and result in successive damages. A good example of the things that we are pointing out in this slide will be the coronavirus COVID-19 pandemic, which has lasted a few months so far. For many businesses that have not been able to open or have reopened but at a reduced capacity, this event has dramatically impacted their sales. In some cases, it has impacted their ability to source inputs. And at the end, all these disruptions in operations, supply, and demand can significantly impact businesses' savings and capital. The agricultural and food sectors are susceptible to weather and other unforeseen disasters that can generally result in losses and financial stress. When we think about losses, we have to consider direct and indirect damages and also tertiary damages. Direct losses are losses that you can directly quantify, such as damages to your infrastructure and inventory, or the impact on your capital. Indirect losses are those that generally arise as a result of the disaster and that can impact production, your ability to produce income, or that increase the cost of running your operation. Disasters can also affect the quality of products and service offered because of disruption in transportation and potential food safety issues. It is also important to keep in mind that even if your business is not directly affected, it can also be affected indirectly when employees, suppliers, distributors, or customers are impacted. Now, tertiary damages are the overall impact to the economy, and that will ultimately impact demand for products because of reduced purchasing power, for example. In an agricultural context, when we think about those direct impacts, we think about how a disaster can impact buildings and infrastructure, machinery and equipment, livestock, crops and products, and even soil erosion. Recovery after a disaster is hard, and that is why it's so important to be prepared and to minimize the potential impact of unforeseen events. Statistics show that 40% of businesses do not reopen immediately after a disaster. A year later, 25% of those businesses that reopen will close. And 3 years later, 75% of businesses that do not have a continuity plan will not be able to stay in business. And we will talk about continuity plans later in this video. Disasters can affect your business financially. It can affect your revenue, as interruptions to your operations can reduce your ability to generate revenue and cash flow. You can also have unexpected expenses due to emergency response, reconstruction, and restoration efforts. And because of lower income and higher cost, it is possible that during emergencies, your cash outflows will be higher than your cash inflows. And while insurance could be a savior, it is important to also consider scenarios where insurance payments could be delayed. Having said all this, losses can be significant, and that is why we stress the importance of preparedness to facilitate the recovery process. Food safety incidents are one of those disasters that can affect your business, and they can happen in isolation or as a consequence of a bigger disaster. Food safety events can be costly for your business and for any business involved in the food safety event and for the industry as a whole. Food safety events may involve the cost of notifying consumers, product recalls and removal of products from shelves, product disposal, damage to a brand or company reputation, which can result in lost market and consumers' trust, and in some cases may involve lawsuits and litigations. So prevention is key. The cost of prevention efforts is generally way smaller than the cost of mitigating the impacts after the incident takes place. Not planning is common and is due to our tendency to think that it won't happen to us. But planning can help us identify and mitigate risks, to be prepared and identify steps and actions ahead of time to make the process of recovery easier if an unexpected event happens. So we want to prepare to mitigate potential losses, to make sure that our investment, properties, and assets are protected, and that we can continue to operate our business. Some preparedness steps may not require a large investment, but some may require some investment. For example, investment in building improvements and in fire protection systems. But it is important to keep in mind that preparedness is really part of the cost of doing business. Let's talk about financial preparedness now. Financial preparedness should be an important component of your overall disaster preparedness plan, and it includes the steps necessary to avoid, mitigate, and transfer risk. In this type of plan, what we do is to first identify potential risks and then identify ways to address or mitigate those risks. Taking steps and identifying a plan before a disaster takes place is better than identifying steps in the midst of a disaster. When you identify potential risks for your operation, you want to consider the probability of an event happening, whether the risk is very likely or unlikely to happen. The other aspect is the severity of the impact, whether it's legible or severe. Depending on the likelihood and severity of the event, then you can identify strategies. For example, if the risk is both severe and very likely to happen, then you may just want to avoid that risk altogether. If the likelihood of happening is high, but with a low severity, then you may want to invest in infrastructure or other strategies to reduce and mitigate that risk. Now, if the likelihood of a disaster is low, but the severity is high, then what you want to do is to transfer that risk, and that is what we do when we buy insurance. So we start by identifying what kinds of emergencies or hazards could affect our business. And then we assess the vulnerability and the potential impact to our business. From that, we identify cost-effective ways to address risks, and we start by focusing our efforts on events that are likely to happen. You can create your own risk evaluation tool, or you can use tools already developed. In this slide, I have the Hazard and Vulnerability Assessment tool developed by the American Red Cross. And you can find this online and use it as it is, or adapt it to your business. In this tool, we evaluate the likelihood of different events and the impacts on different aspects of a business, from operations, infrastructure, and facilities to others doing business with us. A tool you could also use to evaluate flooding risk is the FEMA Flood Hazard Mapping. If you are thinking about building in a particular location with high flooding risk and a high frequency, it may be a better option to avoid that area and look for a different location. And if there is any risk of flooding where you currently operate, flooding insurance is a must. We can look online for different tools that can help us assess local and regional disaster risks. So we analyze potential hazards and their likelihood of occurring. And then we analyze their potential impact on our business and how they can affect our finances. Our production and ability to deliver products on time can be affected, for example. If we are not able to deliver products on time, that can affect our relationships with buyers if we had previous commitments. Any product damage or reduced quality could also affect customers' satisfaction. Disasters can affect our business by delaying or interrupting production, which can also result in lost sales and income. Emergency events can also result in additional costs or new expenses such as reconstruction, equipment or building replacement and repairs, replacement of damaged inputs, overtime labor, and outsourcing services or production, among others. There are multiple templates available online that you can help you go through a risk assessment of scenarios and impacts, like the one in this slide that you can find at the FEMA website, and is part of the Ready Business Toolkit. If you Google Ready Business, you will find many resources and templates you could use for your preparedness plan. This is another Ready Business template that you can use as a guide to evaluate interruptions due to unforeseen events and how they can affect your business operations and functions and the financial impacts given the duration of these interruptions. As we analyze vulnerabilities, we can ask what if questions. For example, if you cannot plant, if planting is delayed or crop is lost, if your inventory or crops are lost or damaged, if products or crops are contaminated, if buildings are not safe to use after a disaster like a flood, if paper records are destroyed, computers of the business are damaged, main supplier of inputs is no longer in operation, internet, gas, power, or water services are interrupted, and income is interrupted. Could you still operate your business? Could you meet your obligations like loan payments or payroll? And how long could you stay in business with no income or if your income is reduced? As discussed before, it is important to anticipate how different disasters or events can impact your operation. For example, how will income, variable, or fixed cost be impacted? Some things to consider are lost production, lost inputs, infrastructure or equipment damage, and cost of repairs. As you assess the potential impacts to assets and infrastructure, it is important to examine the need for insurance. And if you do have insurance, to assess whether coverage is adequate. and how your current policies work. Having a business plan, a business disaster plan, a business continuity plan is really helpful for putting all of these considerations and steps into writing. How can a business prepare financially for an unforeseen event? Well, a key aspect, whether or not you are preparing for a foreseen event, is managing your finances. This requires having a budget, monitoring income, controlling expenses, and monitoring cash flows to make sure you have enough cash to keep your operation going. Making sure you understand the level of indebtedness of your business and trying to control that, and paying debt off as possible. It is important to know how much debt you have and if there is an emergency, whether you have the capacity to take on more debt and whether there are lines of credit available that you can access. It is also important to keep track of credit cards, knowing who has access to them, and having a card or cards, depending on the size of your business, with available balance that you could use in case of an emergency. In the previous slide, we talked about the importance of budgeting and cash flows. And as you think about cash flows, it is important to understand how much cash you need to operate your business for a week or for a month to cover those fixed and variable expenses. The idea here is to have a clear understanding that if there is no income coming in because of an unforeseen event, how much cash you will need to still keep your operation going. Because there are potential scenarios where you may still have expenses and no income, or you may have unexpected expenses, building and maintaining an emergency fund is important. And you could, for instance, have that emergency fund in a separate savings account that you could add to every month. The idea is to build a cushion little by little. Another good practice is to have a small amount of cash available at hand, a small denomination if possible. Also, credit cards with available credit. And insurance is paramount. Maintaining adequate insurance coverage based on the risk that you have identified is paramount. Insurance is a key component of a risk management strategy for any business. Depending on the type of business you have and potential business risks, there are different insurance that you may need, and we encourage you to discuss that with your advisors or with an insurance agent or broker. We have listed some here, but there are others that might apply to you as well. We have product liability insurance, which protects from liability resulting from defective product that causes injury or harm. This is important for food businesses. Many buyers, like large supermarkets, now require this insurance from food suppliers. Commercial property insurance protects against loss and damage of company property and can cover the cost to repair or replace damaged property. Then we also have business interruption insurance, which covers lost revenue in case of disasters. Flood insurance is very common, and if you're a farmer, crop insurance. There are other crop insurance packages that you could also consider that would include many insurance policies needed for your business. An example is the business owner's policy for small businesses. Make sure you have adequate coverage. Inadequate coverage can be an issue if an emergency happens and you think you're covered, but you may not be. Because of that, it's paramount to review your insurance coverage at least annually. You have to make sure you understand coverage limits, what's covered, what's excluded, the amount of deductibles, coinsurance requirements, and documentation needed for claims. Also, make sure your policies are in effect. Make sure they are not expired. Something else that is important for claims is to maintain a good inventory of your assets, buildings, equipment, machinery, and other insured assets. Here we have a template from Ready Business that can be found at the FEMA website and that can help you go through the process of keeping an inventory and evaluating your insurance policies. Another component of your preparedness plan is having a business continuity plan. And what that entails is basically developing a plan to restart operations after a disaster. In this process, you will identify people, resources, and equipment necessary to run the operation and backups in case of an emergency. For example, a backup facility where to operate, backup suppliers and distributors, and also a backup plan in case your employees are not able to work or operate as normal. You may have to identify what changes could be made to production and logistics if there is any interruption. Before this step, it is important to document workflows and logistics so it is easier to adjust steps in an emergency. In order to continue with operations, having cash at hand could be helpful. Maintaining some liquidity in your business is a good practice. It is also a good practice to have a business succession plan, so it is clear who will manage the business and operations if something were to happen. Again, this is a template from Ready Business that could help you think through resources needed to restore business activities after an unforeseen event. There are important financial business documents that you need to make sure are safe if a disaster occurs. Some examples are deeds, mortgage and lease agreements, loan documents, insurance policies, titles for vehicles and other equipment, previous tax returns, bank account information, inventory of assets, and other financial and legal documents like wills and trusts. You can keep all these documents in a secure location, a grab and go file that is water and fireproof, or you can save them electronically. Electronic record keeping and maintaining electronic records of the business in a way that you can access them from anywhere is a good option. Documents can be scanned and saved electronically if you only have paper copies. Make sure to back up electronic files frequently and keep copies in different locations or in a cloud-based program or system. Documenting valuable assets and keeping a list of important contact information from buyers, suppliers, insurance providers, and banks can prove to be very helpful in an emergency. And make sure that someone else you trust other than yourself has access to information on bank accounts and passwords. In the event that something happens to you, the person who will need to be in charge of the business, this could be your spouse, your kids, your business partner, will need access to important information. Another piece of information that could be included in your disaster preparedness plan is potential external sources of funding and loan programs. For example, FEMA financial assistance programs, Small Business Administration disaster assistance, and if you're a farmer, the USDA Farm Service Agency emergency loans. For farmers, there is a good USDA tool, the Disaster Assistance Recovery Tool, that you can use to identify potential disaster assistance programs that could apply to your case. Thank you for watching this video. We will include references to some resources that we hope you may find useful.